Okay, everybody, here we go. It's me, Gregory Mannarino, Monday, still Monday, November 4th, 2024. Beautiful day on Wall Street today. People, we have a lot to talk about here, and I'm going to show you something you're going to find kind of, well, maybe shocking, maybe not shocking, probably not if you follow this blog here, but we have a couple of things going on here. And either one of them or a combination of the two could cause the greatest, most absolutely stunning stock market crash of all time. And we may be on the threshold of something like this right now, people, as we move into 2025, past the freaking selection tomorrow. I can't wait for it to be over with. I don't give a damn either way who is selected. Don't matter to me at all. It's all going to equate to the same thing. Oceans of more debt, currency devaluation, artificially suppressed rates, economic hardship on, of course, the middle class. Just there's no way out. All right. And your savior guy or savior girl ain't saving nothing, just so we can be on the same page here. Anyway, look. So we had a volatile stock market today, finished lower pretty much across the board, but well off of the lows. This is the closing bell. The Dow was down about 450 points earlier. And, this is all interesting. It's all well and good and just lovely to look at. But, as you all know, it's the debt market here. And we're seeing some incredible gyrations here. And it's just not stopping. And that's the problem. This is, again, the MMRI. I mean, this is just out of control. This spike in such a short period of time, this sell-off in the debt market, it's going to take a lot of effort here for, obviously we know who's buying all the debt here. It's the Fed to keep rates suppressed, and they're going to keep buying this. I mean, look, they're on a mission. They've already laid out their case. We have Puppet 1 and Puppet 2 promising you, well, what the Fed's selling you. So imagine that. Imagine we here in the United States, with a laughing stock of the world, we have two non-human entities running for office. They're running for that office here. And both of them are selling you the Fed's plan to lower rates, currency devaluation. And why? Because that's the single power, one, of central banking. Take away that power, their ability to inflate, and we win. When you got Puppet 1 and Puppet 2, well, selling you the Fed's plan, that means we lose. You understand? That's why it doesn't matter to me at all. Zero. I don't care at all. I don't know the way to say it. Who is selected tomorrow? Don't matter to me, because I know the big picture, and so do you. And if you think it's going to change in any way, if you think all the promises that have been made, if you didn't learn anything from the last election, all the promises that were made, and the one before that, and the one before that, it's just, it's too much. But that's just the way it is. So look, now before we move on to what I really like to talk about, let's, again, so I already showed you what the market did. We have this instability here in the debt market. You got crude oil creeping higher. You got gold and silver today under a little pressure. You got cryptocurrency, except for Doge. Look at that, 5.11% higher. Crypto under pressure. Okay, now with regard to economic news, imagine how surprised we are. Are you ready for this one? U.S. factory orders tumble in September. Really? Oh, like I've been telling you, let's bring back every single factory right here to the United States, because that's what Trump is telling us. He's going to bring back, if he's selected tomorrow, he's going to bring back manufacturing in factories to the United States. They're getting no orders as it is. So I would imagine, because he knows so much about economics, that if he brought all these factories here, they're all going to fail. And we'll have no manufacturing anywhere. You understand? So let's just read. Orders for manufacturing goods fell 0.5% in September, according to the Commerce Department. It is the fourth decline in orders in the past 5 months. We've been in free fall way longer than that. We had one bump higher. You all know that. Then we continued downward. The more comprehensive data released Monday, durable goods orders also were revised down. Imagine our shock here. Core capital goods, a key measure of factory activity, is also in the toilet. Imagine our surprise here. Imagine our surprise. It's not going to stop. It's only going to get worse from here in. Why? People, again, man, just if I could just make you guys and girls understand just a simple concept, and it should make sense to you. And I'm just going to repeat it again. I love repeating things. Are you ready? To have a strong economy, you need a strong currency. Does that sound good to you, or does this sound better? To have a strong economy, you need a weak currency, because that's what you're being sold, and that's what the Federal Reserve wants. And President Creature, well, whoever the next creature is going to be, they're both selling you that. That's correct, right? Both Trump and Kamala know way more about economics than Greg Mannarino does. How about not even there's a shot in hell that's true? Well, maybe Trump does, but Trump likes to lie, and he's going to distract and deceive, and he was going to pay off the debt in 2 years because of tariffs his last time he was president. That didn't work out too well. We got 8.6 trillion more of debt instead of paying off the debt in 2 years because tariffs were going to work like he's saying now. Something seriously going on here. And Kamala's plan, it's brilliant too. Let's just throw enormous amounts of cash at wherever she wants to throw it at, and that's going to help you out too. Do you see what I'm talking about? Make it up, man. Make it up. So we understand, and I've been giving this a lot of thought. So Warren Buffett now, he's like a bear. He's been dumping shares in companies, building up a massive cash pile right now. And this isn't about the selection that's coming up tomorrow. Warren here, our lovely friend, is thinking further down the line. Now, that's really what I want to speak about. Warren is, I would say he's part of the in crowd, and he's an insider of the highest order. So the fact that this guy, Berkshire Hathaway, has been dumping stock, getting out of positions in a market that does nothing but seems to go up. Obviously, he knows something or is privy to something that you and I aren't supposed to know, but I know what it is, and I'm going to show you what it is here. Now, I have spoken about fundamental factors, fundamental things that should support a normal market. One of these things is called a PE ratio, or a price to earnings ratio. Because of the mechanism, yet again, it all comes down to the mechanism of currency devaluation, artificially suppressed rates, which is an economic wrecking ball. But you see, Trump didn't tell you that. Kamala didn't tell you that. And they're also not going to tell you what I'm going to tell you here. Although let's give credit where credit's due. Prior to Trump's last tenure, he did say the stock market was a big, fat, ugly bubble. Didn't explain why. But then when we became president, it was no longer a big, fat, ugly bubble. It was beautiful. Remember, we're all rich. He wasn't talking about you. He was talking about his friends like Elon. You know what I'm talking about, right? Anyway, so let's talk about PE ratios. Now, PE ratio is a way to measure the value or the relative value of a company based on what an investor is willing to pay to own a share of stock in that company. Are we on the same page? I think so. Now, different industries generally have a different PE ratio. It's just the way it works here. Okay, well, I'm not going to go crazy with that. I want to stick to one PE ratio, and that is the PE ratio of the S&P 500. And why is this important? Because we can get a lot of information out of the value or what investors are willing to pay for a share of stock and what it means or what these have shown us prior to stock market crashes in the past. So at least we have something as a metric here. Now, I want you to have a look at this, all right? S&P 500 PE ratios and stock market crashes. Let's look at this top one here. In 1929, the S&P 500 PE ratio was 17.77. These are, market crashes people remember. Now let's move down the line. 1987, S&P 500 PE ratio 18. 2008, the financial crisis, 21.46. That's today, 29.22. What does that tell you? The crash that's coming here is going to eclipse all of these by multiples. Obviously, you can see it's trading on higher multiples of the higher PE ratio here. Now, let me ask you, why isn't it that no one has what? Why is it that? Do you think that maybe Jay Powell knows about that? Knows about this? Central bankers know about this. Those individual creature, non-human entities currently running for office, although they don't talk about this stuff, they didn't mention how the Fed runs the monetary system, nor inflation, or they have the control of inflation, but they had to blame it on each other. But it's really the Fed because you must be lied to and deceived. This is a deception as well. Okay. So what do you guys and girls think about that? If that doesn't tell you something, and maybe that's why Warren Buffett is kind of, flying the coop, getting out of here. So what this really comes down to is two huge problems. Number one is this instability in the debt market. You all know this. I know for a fact one day this is going to go off the page when the debt market sells off. The debt market right now is being rigged by central banks. The Fed's in here buying it all. So are the central banks as well, collectively working together to fulfill their end game, their destiny. And there's nobody on the inside that is looking out for you and me. Okay, this is the destruction of the world as you and I know it. And it's going to lead to, again, a whole new set of rules, a whole new paradigm. Serfdom is really what's going on here. So the two things, obviously, is one is, and this is not going to be by chance or by accident. We're here deliberately. These current multiples in the market have been created on purpose. Again, you know the mechanism here. When you have the two things which are economic destroyers, if they're flipped upside down, strong currency obviously is what we need to have a strong economy. A rate of interest high enough to support the purchasing power of the currency. So why is it that we have the Fed in here now saying, oh, no, we need to lower rates here? That's economically destructive. Why is Trump telling you that, promising you we need lower rates? Why did Kamala adopt Trump's idea? Trump was the first to say it. Kamala said, oh, I like that. That sounds good on paper. Let me tell the brain dead people who have no idea what's going on that I'm going to destroy them to prop up the stock market. You understand? Do you see what I'm talking about here? So, again, when you have that kind of a mechanism flipped upside down, it's a wrecking ball for the economy of the world, and that's why we're in the boat we're in right now. But no one's going to tell you that it's the fault of Biden. It's the fault of Trump. No. It's no. That's, again, you must be deflected because that's how stupid they think you are. If they would try to explain to you things like PE ratios and debt hyperbubbles, and you see that might just get a brain cell of yours functioning. But no, they think you're so dumbed down that they can easily deceive you. You understand? It's incredible how stupid Trump thinks you are, how incredibly idiotic Kamala thinks you are as well. Both of these creatures do not work for you. And whoever wins, there's no winning. Whoever is selected tomorrow works for the Federal Reserve. Because what are they doing? Promising to sell you the Fed's plan. I want you to think about that as you go vote, because your vote matters so much. Anyway, look. So as I was saying, the economic destroyers are positive for the stock market. This mechanism here causes, exactly, Keith, thank you, causes this multiples expansion cycle, and then this is what you get, is what I'm talking about here. So now that we've gone so far beyond the 29 crash, the 87 crash, the 08 crash, what do you think? I mean, I have no idea. This could crash tomorrow. And look, there's a lot of you out here who still believe that tomorrow is the day. That I don't know where you're getting this from. I think we should expect volatility tomorrow. I think if the market doesn't get Trump, who's the proponent of negative rates, which would, of course, enrich the 1% and 2%ers, Elon Musk, the rich people, of course, and destroy you, well, whatever. The market is going to be very unhappy about it. The crypto space is going to be very unhappy about it. The crypto president, I'm going to make the United States the crypto capital of the world because that's what you want and that's what you need. What a 180 that guy did, huh? It's epic. And then, of course, Kamala said, hey, you know what? He's the crypto king, so I got to be the crypto queen. Let's do it. This is how dumb they think you are. I know you're not that dumb. But anyway, so the two issues that we're facing here is obviously a S&P 500 PE ratio that is just off the Richter scale. And then, of course, this debt market issue. It's all on a knife's edge. All of this is on a knife's edge. And either one of these two factors could easily melt down the stock market, which is going to happen anyway. We all know that. That's where we're being led to. But again, what bothers me and what should bother you is what event are they going to use? What's going to be the trigger, or should I say the scapegoat that they're going to point to? Because you know how this works. The Fed must be portrayed on the side of angels. That's why no one has called out the Fed here. They've both blamed each other for inflation here, but it's obviously the Fed's fault. Presidents don't have printing presses. Presidents don't have the ability to devalue the currency, but you've been told they do because Trump blamed Harris and Harris blamed Trump because Trump was the guy who was supposed to pay off the debt in 2 years because of tariffs, but instead borrowed more into existence than any other president in the history of the United States. But that's how much he loves our country. Make this stuff up, man. It's too funny. It's too funny to me. It makes me laugh. It makes me laugh. Anyway, look, man. All of you know I have been exactly, whether it's a war, a scamdemic, a combination of the two. Thanks again, Keith. I don't know what it's going to be, what event they're going to point at here. But understand, the meltdown in the debt market, because that is, again, that's the monster. That is reinflated this bubble. Look at the PE ratio again of the S&P 500, a housing bubble, and everything else that we have here. The debt market is really where the crash is going to begin and end. It has nothing to do really with this. That wasn't even the issue last time. You all know that. It wasn't that the Dow went from 12,000 to 6,000. It was the credit markets were freezing up. And that's going to happen again. The credit markets or the flow of debt, flow credit through this debt-based system is going to stop. Everything is going to stop. Transactions are going to stop. No cash in your bank, in your bank accounts, nothing. It's just going to end. And it's not safe anywhere. A lot of you, even though I have recommended people should look into credit unions, it doesn't mean it's safe there either. It's safer there. When something is out of your control and you're not in your hand like this, there's always counterparty risk. Sound about right to you? Freedom for all. Absolutely. I have had my fantasy pen. Awesome. Black Pixel. Thank you. Anyway, yes, that's exactly where we're going. Power gear. A credit freeze. Because that's what was happening. You see, no one's telling you that either here. Okay. If you look up the market crash of 08, they're going to tell you about the financial crisis and the housing issues. It really was coming down to the credit markets were locking up. It wasn't about the housing crash or the stock market. That was profound. People lost everything. Imagine my shock. That's what they always do. That's how the market runs, period. But this one is going to eclipse everything else. What did they do to fix it? What did they do? Well, the Fed got in here, started buying it all, QE1, QE2, Operation Twist, keeping rates artificially suppressed up until now. They've used emergency monetary policy all the way up until now. And they're reusing it right now to a higher degree by getting into the debt market and buying it all. And that's supposed to help you, right? Make it up, man. Make it up. Yes, I love platinum. Platinum, palladium, I love those two. I think they should be in your portfolio, people. But I'm telling you, if you just want to look at the PE ratio of the S&P 500 in relationship to other stock market crashes, this alone should tell you that we are in a lot of trouble. And all of you know I've been the biggest bull in this market for many, many, many years. I've been saying buy the dips, buy it all, buy it all. But we got to be very cautious here, especially after the selection tomorrow. We got to keep our eyes on the debt market. Now, look, a few things are going to happen. I will restate these tomorrow, okay? But you got to the futures markets are going to go all over the place. I predict that Trump is going to declare victory before the tally. And that could potentially send the futures market into a frenzy. It could be a good opportunity for very, very astute traders of futures. But it really could rattle the markets. Now, look, most of you who follow this blog understand the one thing, it always boils down to just one or two things, but there's only one thing that the market hates, the stock market hates above all others. I mean, this doesn't even scare the market. Not even a P ratio at nearly 30 here. And if you look at this doesn't scare the market. As a matter of fact, the debt market action isn't scaring us at all. We're still at pretty much record highs. But there is one factor. You know what I'm going to tell you? I think some of you probably know what I'm going to say. Uncertainty is the enemy. When the market is not certain of whatever, you have to understand. I've said the market is like a little twisted, demented child that must constantly be reassured of a particular outcome. Investors are kind of very interesting people here, and a lot of it is emotionally driven, obviously. But there's one thing that drives the markets to the downside, and that is uncertainty. And there is a lot of potential for that tomorrow after the votes are tallied. However, however it's going to play out. You understand? And I'm still saying it's just a pretty simple. It's simple to understand that, again, the market really was pricing in Trump for a long time. Okay. When Biden was fumbling with everything that the man's old, he's got age-related dementia. I'm not putting him down. Okay. Understand that. It was a no-brainer that Trump should have shut up instead of kept picking on Biden, talking about how he was demented and twisted. Big strategic mistake. He just should have talked nice about the guy, because there was no way Trump was going to not be chosen. Understand? But then Harris comes in. She goes to Wall Street to get vetted first. Jonathan, thank you. And no, I'm not familiar. But anyway, she gets vetted. Wall Street likes what they heard out of her mouth. Again, every presidential selectee goes to Wall Street first behind closed doors. No minutes, no photographs, no recordings, nothing. And then they go to you. Should tell you something here, Joseph. Thank you. Anyway, what was I was going to get sidetracked. Oh my God. Anyway, so what I was trying to lead up to here is uncertainty again. Is the enemy of the market. Now, I really believe that we're going to see if Trump is selected, the market's going to be happy. It still could turn out to be a sell the news moment a little bit. We'll see, but I think the market would be extremely happy. Give it a little time to play out. Harris, no. Again, Trump is a proponent of 0 to negative rates. We know that from his last tenure. The market wants that. Market doesn't care if you end up in the street naked. You understand? The market don't care about that. The market cares about easy money. Obviously, Trump understands that easy money boosts the market. And that's what he wanted to see at the cost of course, the economy. And the deception is very simple. The stock market's high. That means the economy is strong. You were told a lot of that through his tenure. It was a complete lie. There was no connection between the economy and the stock market. And all you got to look at is the money velocity all through Obama, all through Trump, all through Biden, except to the end. When you have a dropping money velocity, you can't have a strong economy. It's just a lie. It's a lie. Now, the fact that we're seeing the money velocity pick up now clearly doesn't mean that we have a strong economy. It means that the phenomenon you and I said would happen about 10 years ago, eventually we would see this as all of these extra bills that have been created on nothing are starting to chase the same amount of goods. And no 3 presidents, and I'm talking about Obama, Trump, and Biden, have been a greater friend to the Federal Reserve, more than doubling the debt These 3 presidents, take every president before them. These last 3 have more than doubled the debt. And now we're starting to see, all these bills coming back home here, and it gets worse than that, being that the world is shunning the dollar. The dollar's losing its status here very fast. The BRICS Nations Alliance, of course, is a big part of it. People don't want our products anymore. So all those extra bills are not going to be needed. They're going to start coming back in whatever form they exist. So with regard to inflation, we just got hit with the first wave of it. And there's another wave coming down the pike as well. It just is a lag effect because of a dead economy. When you have a dead economy and the rate at which cash is moving through the economy is slow, it takes a very long time for those bills that have been created to make their way to you. By the time they make their way to you, inflation is already set in. But the 1% and 2%ers who have access to the cash first, well, of course, they're loving it. You understand? These concepts are so simple. They really, really are. Anyway, so with me being a major bull in this stock market here, does this rattle me? Yeah, I'll be honest. It really does. When you have this convergence of this PE ratio here, and then you got, wherever I put it here, these issues with the debt market. Where did I put that? Oh, I don't even know where it is anymore. Oh, here. Then you got that. This on a hair trigger. I mean, anything can happen here, people. And that's why we always have to have the high ground, you and me, where we've always been on the right side of this. Geo Rider. Thanks, bro. I appreciate that. You guys know what I'm talking about here? Are we on the same page? I really think we are. And again, look, man, I love all you guys and girls with all I got in here. I look out for all you guys to the best of my ability. I know what I say sometimes maybe you don't like it because you put your faith in the wrong place here in this puppet or that puppet. But let's put the puppets aside and look out for ourselves and each other, because we're being wiped out systematically and methodically. And when this hyper bubble, just looking at the PE ratio of the S&P 500 bursts, it's going to change everything, man. I just don't know what event they're going to use. Is it going to be a massive terrorist attack here in the United States? Another scamdemic? What are they going to do? You see, the last scamdemic, let's talk about this real quick, people. The last scamdemic, I said something that nobody else said, and I mean nobody. You know what that one thing was? Everyone was expecting, but they shut down the world economy. I want you to think about that. Everyone said, this is it. The stock market is going to crash. I looked at the whole picture and I said, they're going to buy it all. Central banks are going to use that opportunity to pump more debt into the system than you could possibly imagine. And that's exactly what happened. I said, get long COVID. People couldn't believe I said it. People were like, Greg, are you insane? You're telling people to buy the market when they shut down the global economy? Oh, Greg wants people to capitalize on this disease process here. No, I didn't look at it like that. I looked at it as like, okay, they shut down the economy. They're going to prop up the stock market. The Fed's going to use this the Fed and central banks are going to use this as an opportunity to buy it all. And what happened? Stock market went higher. And again, I don't know how many, I think I might have been maybe the only person on the planet, maybe there's 2 others who said get long or buy the market during COVID. Jeffrey, thank you. Don't be surprised, bro. They're going to push more stuff on us. They're going to tell you about things that were eradicated that are now coming back, and they're going to show you disfiguring photographs. That's how they sell you. Fear. Fear has been used as a weapon against you and me and the people of this planet since time immemorial. It's a control mechanism, and that's what really this is all about. It's really what this is all about. Anyway, man, I don't even know what else to say with all this. Just look, let's just get past tomorrow. What I intend to do, look, I always try my hardest every day to enlighten all of you as to what I see. And I'm not right all the time. I am not right all the time. I have been wrong. Right? But most of the time, just look at our records here. We've killed it. We've slaughtered this. We've got it 90+% right. That's pretty staggering freaking record here. What I intend to do after the selection, as we move forward here, I'm just going to take in more data as much as I can and analyze it and look at it and connect. All I do is connect the dots, people. I don't know another way to put this to you. And you might think I'm even kidding, but I'm really not. I write things down. I put it into like a chart, but I don't do it. I'm not fancy with computers, so I just write it. And I just literally kind of draw dots. And I draw a line through the dots. It's really what I do. I'll show you one day what I do. And that's kind of what I do. I say, okay, what is the most likely, not the definite, but the most likely outcome here? Now, with regard to the selection, I don't know. I was asked today, I was on with Kevin Gallagher earlier today for an hour. Nice interview that we did. And he asked me, Greg, what's your take? I don't have any freaking clue, man, about who's going to be selected tomorrow. And I'll tell you why. Initially, I had an idea. Okay, the market does want Trump, no doubt about it. Doesn't mean the market's going to get what it wants here. And generally, you know what? Let's just leave it there. It doesn't even matter to me. It really doesn't. I don't even care. All I'm going to do is look at the dynamics in play and do my utmost to obviously make sense of what's going on here. Oh, anyway, people, that's kind of where we're at, man. And is there anything you guys and girls want to cover before we end? We did a lot today here. We covered a lot. And if you take one thing away from this, here, I'm going to hold this up for you. Take a screenshot. Take a screenshot of that. Take a screenshot. You ready? Take a screenshot. And I want you to ponder that. And that should tell you something. That really should tell you something. Maybe that's why Warren's bailing, man. Maybe Warren understands something that you and I don't know. I watch the debt market. You know that. The P ratio things of this market, I've been telling all of you for 1,000 years that we're getting this multiples expansion cycle, multiples expansion cycle, multiples expansion. Multiples expansion is going to turn into multiples contraction. But and I can't tell you, thank you, Stephen. I can't tell you how vicious that's going to be. It's going to be so absolutely devastating that people aren't going to know what to do with themselves. GeoRider, thanks again. Anyway, guys and girls, we're kind of there. Yes, we are witnessing this, the fall of an empire. Now, I'm not just talking about an empire here in the United States. The global, this whole thing, this economic and financial nightmare, because that's what we have here, that has inflated bubbles like you can't, and inverse bubbles. I mean, cash, this mechanism here, okay, of people, of investors shoving cash into assets that they know are massively overvalued. XRP plumbing, thank you, has caused cash to come out of assets you should be going into. But then we're talking about the paper derivative market here, something that's not on the elemental chart. I'm talking about the rigging of precious metals here. All of this is going to get real. You have to understand, look, these mechanisms that we're witnessing here have created what you all know, what we have spoken about is distortions for many, many years, how they're going to get worse. And we are at the point here of, are we on the threshold of an event that's going to change the threshold of the whole entire planet? I think we are. The whole financial platform, everything's going to change. But, the job of the market is only to do one thing. Again, boils down to one thing, to determine fair value. It can't happen anymore. When you have a mechanism, and I want you to think about this if you're new here, where central banks are in here buying it all, keeping rates artificially suppressed, and understanding that mechanism of artificially suppressed rates and therefore currency devaluation, it strips out the ability of the market to do its one and only job, to determine fair value. You understand? So that's why you have this environment. Why is it, let me ask you, that Trump has never explained this to you? That Kamala, who doesn't know, she can't explain this to you. But I have to say that Trump did go to Wharton Business School. Either he didn't pay attention, which he probably didn't, or whatever. But these are such basic concepts. Anybody out here with the most rudimentary understanding of economics and finance could come up with the same conclusions that you and I do every freaking day. So we kind of are there, right? We know what we're doing. We know why we're doing it. We're not going to stop this here. But I just want to say one more time that I keep looking deeper into 2025, regardless of who is selected. We are going to see global debt balloon faster, currency devaluation faster, artificially suppressed rates faster. And that means the world economy, no matter what this person told you their policies are going to be, or whatever this person told you what their policies are going to be, they have no power. They could put a farm animal. In fact, I'd rather have a farm animal sitting behind the Resolute desk than either of the two creatures right now that are currently running, because there's this one's a liar and this one's a liar. And they're selling you the Fed's plan. And the Fed, trust me on this one, is not looking out for your best interest. Are we all on the same page? Anyway, guys and girls, we are going to get out of here. Covered a lot here. Please let me know what you think. It's nice to see that 92% of you believe that the market is overvalued. I mean, you don't even need the math. You don't even need the math behind it. It's just, it's a no-brainer. People know inherently when there's a problem, right? Anyway, thank you all for being here with me, for your love, for your support. And just remember, you are part of a worldwide family. Do you know how valuable that makes you? We are not just a means to an end. Our blood and guts aren't meant to just grease the wheels of this machine here. You understand? We are all, and you're going to hate this, some of you, okay, because I know how much you hate it, but I don't give a damn. Divinely created, okay? That means we all possess that connection to the Almighty. Do you understand? And we have value. We have value, but we're being puppetized and manipulated. And God is watching. I'm going to say that. God is watching. I love all of you with all I got. I mean that with all I got. I will see all of you in the morning, people, okay? We'll carry on no matter what happens. Tomorrow, the next day after that, a week from now, it doesn't matter. Because we are all looking out for each other always, right? We'll see each other in the morning, okay? Until we do, please take care of yourselves and each other, all right? That's it.